The deflationary forces from the tech stocks breaking in 2021, probably too big. The power of interest rates rising and depressing the real estate market, very negative, slow-moving influence. I suspect that they will once again dominate, and we will have a recession running perhaps deep into next year, and an accompanying decline in stock prices.
So the recession that you're predicting is probably not going to happen in 2023, but
it may start in 2023.
The Federal Reserve recently said that they think we've cleared the recession hurdle, and they don't really project a recession any longer.
Right.
You disagree with the Fed on that?
Yeah, I think the Fed's record on these things is wonderful. It's almost guaranteed to be wrong. They have never called a recession, and particularly not the ones following the great bubbles. They prided themselves in stimulating the bubbles. They took credit for the beneficial effect of higher asset prices on the economy. They have never claimed credit for the deflationary effect of asset prices breaking, and they always do.
What is going on, YouTube? It's Brendan from Market Makers. I'm back. I'm tan. It's Monday. The market just opened 15 minutes ago or so. So we're going to go ahead and get this video. Guys, I'll be doing a Thursday video as well. This is a very important week. We have the CPI coming out this week as well. We'll look at the events calendar in a second. I hope everybody had a fantastic weekend. I wanted to take a moment because today is September 11th. On a serious note, now, a lot of people that watch this channel are in my generation, like the end of Gen X, maybe some of the older millennials in their 30s or so. But there's a lot of people like my producer, Lee, who also manages our Discord. I think he just turned 26 or 27. Little baby boy. And, he doesn't remember 9/11. So there's events that happen in all of our lives that mark your life. You'll remember forever. For Lee and for his generation and Gen Z, it's going to be what? The pandemic, right? For my dad remembers what he was doing when JFK was assassinated, right? So this is how I felt about 9/11. I remember it very clearly. I was trading energy at the time. And it didn't impact me directly, meaning I didn't know anybody in the Twin Towers or anybody that was killed trying to save people. But I had friends. There's actually one guy at work that sat in my area. We were work friends. And when he found out his sister was in that building for a job interview, I'll never forget the look on his face. What I did, guys, was I found a video. There's a tribute video that somebody did. I don't know the original guy. I wish I did so I could give him credit. But YouTube's pulled it down many, many times. They pulled this video down because of graphic content. Obviously, it's showing, graphic content, planes flying into buildings, people leaping from buildings because of the fires, extreme horror, essentially. But this guy made an awesome edit. It's with the band Live, one of my favorite bands, playing the song Overcome in the background with news clips. So I can't upload it. There is a couple copies of it. I think we have it on our Rumble actually from last year. I'll check with Lee, but it may be on a Rumble. But I'll get it over to Rumble again if we didn't do that last year. I don't remember. But I'll put it over on a Rumble again. I'll pin our Rumble link underneath here in the YouTube comments. So if you do want to watch it, I still get goosebumps. I try to watch it on September 11th every year, just to remember. Those who don't learn from the history are doomed to repeat it, and that carries over into the markets as well. Let's go ahead and go back to the markets, guys. So that was Jeremy Grantham on our intro. He sat with Bloomberg, David Rubenstein, this past week. Didn't talk too much about markets, but I have a couple good clips. They just did a short 20-minute interview, plus they had the commercials. But I was really hoping they drill in on the markets more. But I want to play one more clip for you from Grantham, and then let's talk about it on the other side. I'll give you my thoughts as well. Lee, go ahead and run that.
Not too long ago that you weren't a big fan of Jay Powell and the way he's been handling inflation. Is that correct?
Yes, that's correct.
And you think he's done a better job recently in getting inflation under control?
I think it's largely out of his hands. The forces work. I suspect inflation will never be as low as it averaged for the last 10 years, that we have re-entered a period of moderately higher inflation and therefore moderately higher interest rates. In the end, life is simple. Low rates push up asset prices, higher rates push asset prices down.
So it's probably no surprise to all of you that my views being having been called Baby Grantham, I have better hair. My views are very similar to his, very similar to Ray Dalio's, very similar to Leon Cooperman, very similar to, I don't know, lots of these billionaires, being that I am a hedge fund plant, lots of these billionaires on what's going to happen for the rest of the decade. I'm not necessarily in a hyperinflation camp. I'm not necessarily in a disastrous deflation camp, although massive crashes are deflationary. I do think we're going to have a repeat of the 1970s, higher, moderately higher to higher inflation with moderately higher to higher interest rates, meaning you're not going to have a new high, most likely for the rest of the decade. This happens all the time in the markets. When I mean a new high, I mean a new all-time high. What can change that? Election cycles, different presidents, Fed stimulus, but just generally speaking, guys, a dramatic decline in the market will come when the recession hits. What did Grantham say that is so key that most people do not understand? Most people do not understand the Fed has never accurately predicted a recession. So you have Fed Chair Powell out there talking about our economists believe that the recession fears are behind us. A soft landing is likely, echoed by Treasury Secretary Janet Yellen, saying that a soft landing is likely. President Brandon saying the same thing as well. But guys, is a soft landing likely? You already know the answer to this. You already know the answer to this. There's no soft landing in sight with the indicators displaying the way that they are, the massive yield curve inversion, the leading economic indicators, the fact that inflation got to the level it did. All of these things not only suggest, but looking back in the data sets, prove that you have a 100%, a near guarantee, let's call it 99.9, a near guarantee of a recession. And people that know. And you're probably asking yourself, this is a little bit of a rant, you're probably asking yourself, well, how come when I turn on Can Never Be Correct, CNBC or Bloomberg, why do they always talk about, soft landing? Soft landing seems likely. Look at the wonderful what am I thinking? Look at the wonderful employment. Look how low unemployment is. Well, a couple of things on the unemployment. Lee, throw up our unemployment chart. Look at the red lines, guys. The red lines are the recession. You always have a trough in unemployment when you're at peak cycle of an economic cycle. Where does the spike happen? During and after the recession. Unemployment hit a 54-year low in this country, which is why it has nowhere to go but up. Fed Chair Powell was in front of the Senate, and I was going to say Elizabeth Warren. I was about to say something and say a name, but I probably shouldn't do that. Elizabeth Warren was questioning him, and she said, the Fed has said that you have a target of increasing unemployment by 1% to help slow down the economy. And she said the Fed has done this 12 times before. And to both those comments, Fed Chair Powell said, yes, you're correct. And she said, every single time you've done that, we've had a recession, 12 of 12 times. He says, yeah, but that's the data. It's not really that cut and dry. And she said, yes, it is that cut and dry. You've done this 12 times where you've increased unemployment by 1%, and all 12 times you've had a recession. So, guys, you can live in fairy tale unicorn land where there's going to be a soft landing. I'm just telling you, because this is an economic freedom channel. I want as many of you to make as much money as possible. And if you're betting on a soft landing, it's never been done before in history. What else hasn't been done is you've never put in a market bottom before the recession, meaning 3,500 on the S&P is not going to hold. 15K on Bitcoin is not going to hold. I want to pound that in your head, because if you listened, and people say Grantham's always bearish. Well, if you go watch that full interview, if you listen to it, you know how much money Grantham lost in .com? He lost $0. They made money in 2000, 2001, and 2002. That's with the S&P dropping 50%. 50, and the NASDAQ dropping 84%. Grantham then predicted the GFC. And he even called the market bottom in the spring equinox, S&P 666. I'm not saying the man's never wrong. I'm not saying the man's a genius by his own admission. I've read every paper he's ever written, and he's one of the guys that I've studied and followed for decades. And he's been wrong on a bunch of things, but these big cycles, he has a habit of nailing these big cycles. He started shorting the market in summer of 2021, caught the decline in 2022, minus 34% or 37% on the Nasdaq, minus 27% on the S&P, takes his shorts off, puts them back on at different times. Overall, he's been nailing the trend. I think it's worth listening to people. Ray Dalio, one of the top 20 richest people in the world, who started from scratch, the world's largest hedge fund, wrote that book, and that YouTube video I recommend it to you guys, Changing World Order. Highly suggest you watch it. There's big changes coming to the country, coming to the globe, and I expect a lot of these changes to cost people a lot of money, a lot of freedom, and a lot of wealth. Okay. So this channel, I want to help you guys as best I can profit along the way, because this is what I do. I want to profit along the way, have a secure family, a secure life, and not have to worry so much about the macro, because the people, including yourself and the people you love, are taken care of, or you have the ability to take care of them. So let's go ahead and jump into this. I have some other clips I'm going to show you on Thursday's video, guys. There definitely will be a Thursday video. Oh, let's look at the time, the schedule. What's going on? Wednesday, guys. CPI is coming out Wednesday. It's going to be confusing for the market because headline CPI is predicted to go up. The consumer price index is up spot 6 versus spot 2. So hotter CPI. That's if it comes to fruition. Core CPI, expect it to stay the same. Year over year CPI is supposed to come in at 3.6 versus 3.2. Again, moving back towards 4%. We're not at a restrictive level right now, but core CPI year over year from 4.7 to 4.3. So bifurcation there in the CPI print. How's the market going to react to that? I can tell you how the salesmen on TV are going to react, because they're salesmen. These people that give you the advice, like Tom Lee, that's a separate rant. I'll do it in another video. But those are salesmen. They want you to invest. 90% of all the money in the market is long at all times. These people make their money by you investing your money with them and them charging you fees. They don't make any money on you either trading the market or waiting for a market bottom to invest your money yourself. The buy and hold strategy, which again, those statistics, guys, 84% of professional money managers cannot beat the S&P over a 10-year period. 84%. And just roughly the same amount of traders cannot beat the market. You got to understand how the market works. Guys, if you want me to make a market video, basically a market Ponzi, I can tell you, I can make a video. It's going to be a lot of work, but if you're interested in watching it, it'll probably be like, I don't know, 45 minutes, an hour long. I'll give you the market mechanics, how the whole scheme works from start to bottom, how they front run your trades, how they manipulate the market, what Wyckoff said about it, what Charles Dow said about it, what modern day investors and billionaires say about it. Maybe we can do a really cool compilation video, and I can kind of walk you guys through it as well. But let me know if you're interested in that, because that's something that's going to take a lot of work, and I like to trade. So let's get into trading. DXY on my screen is dropping down 104.535. That means, without even looking yet, the euro is probably going up and the markets are going up. So let's go ahead and look at that. Let's see if this holds anywhere up here. If this starts dropping, this is a potentially bullish week for the markets. If the markets just decide they don't care about the headline CPI going up, they don't care about oil prices, we'll see what happens, because again, core services is going down on inflation. So this could come down. Let's see if 104.309 holds. Let's check out, is the VIX dropping too? The VIX went up a little bit, 14.20. VIX is basically useless. The VIVIX is much better. We'll have to look into that and see. I'll put that up here. We used to show the VIVIX and people kept requesting the VIX, but the VIX with 0-day options and a bunch of other things is just causing a lot of problems. Let's look at the US 5-year. Yields are slightly down, 4.407%. Again, you have this channel you're trading in. If you come back down to test the base of the channel, market's going to rally, guys. Market's going to rally if the yields keep coming down, if the dollar keeps coming down. It's very binary. It's very simple. Understanding that stuff is easy to watch. Getting your trades is more difficult. The US 10-year, 4 spot 282 again, a little bit depressed today. So we'll see what this does if this holds out for the day. I think everything's on pause waiting for the inflation data, and then the ECBs this week as well, I believe on Thursday. Let's look at the euro dollar. Of course, euro dollar is going up. It held its support at 1 spot 07 as you can see. So we're seeing if the euro dollar can bounce here. And then let's go ahead and look at the resistance 1 spot 0833, and that's if it comes up to the next level. If it wants to fall down to another level, if the market reacts very bearishly towards this news, and again, I'm looking at that golden ratio 1 spot 056 for the euro dollar to tumble down to, breaking this uptrend. Okay, we have to see how the market reacts. That's a psychology perspective. Bitcoin is still selling off. This is a 3-day chart, guys. 3-day chart. Now, just talk about cycles for one moment. Again, September is the fall equinox. When we look at our S&P charts, we look at the pivot dates as well. You know, if everybody expects the market to go down, what could happen? You could have the inverse, right? So I saw an article. Goldman said hedge funds started shorting everything again last week. So we'll see how this plays out. We'll see how this plays out. But what I think's going to happen, again, is I expect a larger sell-off. I'm going to show you the levels that I like here. But what I think's going to happen specifically with Bitcoin is, again, I'm just looking at us giving this up. Now, Bitcoin's been steadily holding this range, as you can see. A little bit bigger candle here on this 3-day candle, but it's steadily holding this range. It's below 25.9 now, which, it's bad. But if it can stay above the 25K, then you stay in this range. I think Bitcoin, in my opinion, is going to hover around this range unless the S&P breaks above 4,600. You could see Bitcoin start moving up, or the S&P breaks below 43, whatever it is, 4330. We'll look at that in a moment, meaning the downtrend is on for the S&P. Then you're going to see Bitcoin pull down. And again, key inflection point with the data. Because if the inflation overall is hot, say core CPI is hot, headline does come in hot or hotter as predicted, that means the Fed may put raising a rate back on the table for their meeting, and which the market has not priced in for September, which means everything will pull down again. It's all a game, guys. It's a BS news cycle game. That's all it is, okay? So it's all a game. So you don't know how the market's going to react until you see it happen. I don't know how the market will react with hot CPI, but cooler core CPI. So we'll see how that happens in real time, obviously. But if we look at Bitcoin again, in our Bollinger Band, our market makers Bollinger Band, guys, same thing. Look how compressed we are. I bring this to your attention every time this happens. When you get the compression, this is where you get the moves. This was the big sell-off that came in, okay? And you're compressed again, meaning a move is incoming. If that inflation comes in low, that move could easily be back up to the upside. And what I'm looking at is 27.2 for the first level resistance. The key resistance here I'm looking at is 28,989, and then obviously taking out that high. So if I paint the bullish picture for you and we talk about, if let's say the CPI that's predicted to be hotter because of oil prices and everything, let's say it's not. Let's say it comes down and core comes down, you're going to see some type of rally. Again, if the S&P takes out 4,600, then I would expect Bitcoin to at least attempt, maybe on a delay, but maybe you get this move, this compression move back to the upside to at least retest its highs at 31,826. Okay, so we'll have to see how that's playing out, because the market narrative will be, look, inflation is cooling. The Fed has to be done. They are done raising rates. Doesn't stop the economy from slowing down, but near term with the raising rates, that's what the narrative is going to be. Expect a bullish market in that event. Okay, so that's something you have to pay attention to. Let's look at the S&P, because this is the big thing. S&P pumped up and sold off. It got up to almost 4,500 here. Looking again on a 3-day chart, it got up to 4496. It's back down at 4478. This is something that's going to, again, just wait. Okay, when you look at this on a chart, this is a clean chart. What's the first thing you see where you're at on price? Massive double top, right? You see this massive double top. There's a couple of key inflection points if you rally. Go from your all-time high to your market low. 45.35 is a 786, right? The square root of 618. You can see this was a massive strong resistance area that spurned that last sell-off. S&P hit 4,500, dip back down. It's at 44.79. So 45.35, I'm sorry, dip back down. Now it's at 44.79. This is a key area to look at potentially trading the market. Now, if we do get a sell-off, if both inflation numbers are hot or the market just reacts super negatively to having a higher year-over-year CPI, what does that mean, guys? It means our key levels are going to need to be watched for this double top to be broken. Okay, we're going to look at this on the daily because nobody's trading on the 3-day chart. Let's look at this on the daily. On the daily, we have our inner channel, we have our outer channel. Been over this many times, but when you look at this, right, when you look at these moves here in the marketplace vis-a-vis Fibonacci, you look at these moves, here we are. If we come up and retest this area, again, I personally, look, depending what that number is, I want to see what happens Wednesday. If we get a spike up, there may be a nice trade in here. That 45.35 to 45.50 is the area that I'm looking to potentially start building a short. Now, again, it's going to depend on what those numbers are. If one inflation number is high, one's low, that's an area I'm looking to trade. If both are low and the market rallies, then we'll be patient and wait because you could see the market want to retest the 4,600 area. Okay, so it's all about understanding the dynamics of what's coming at you in real time with the data and looking at the market's reaction. But if we do get a bearish structure, again, that double top structure, right? If we get this double top structure and it breaking down below this 43, where is it? 43.34 takes out this pivot. You take out that pivot, guys, that's when you're coming down to that 42.30, 42.10, 42.50 level, the base of this channel, right? Who spent many, many weeks in this area building that Wyckoff accumulation to break out of 4,200. I expect that to be strong support. So you would obviously see some type of bounce, some type of rally. But if you were to break that, guys, that's when you're going down to your next level, your 4,000 level. Okay. And we can have many videos before now and then to talk about this as it happens in real time, but that's just the near term market movements. And again, I do believe, regardless of what the inflation data is, it will be a rally to fade. I think the damage is done with the rate hikes. The markets will slow. So if we come up to take out 4,600, I'm still looking at an area to fade it. That's what I'm looking at. Okay. So the first test, take out your old high, 45.40. So that 45.35. 45.50 area, strong resistance that I'm looking at. If you break that, watching that 4,600 area, but this is really key, trying to break back into the inner channel that you've already been rejected from once before, and price is struggling right now. So I'll have to turn on the news to see what's going on in the markets when I'm done with this video. So that's where we're at on the S&P. Let's look at a couple of things. If we look at the market here, where are we at? The 20. What's the percentage of companies above the 20? Above the 20, you only have 40% of the companies above their 20-day in the S&P 500. 60% are below the 20. Let's go ahead and move this. Let's check the 50. This is important because why? Algorithms buy based on some of these VWAPs and moving averages. Only 33% of the companies in the S&P are above their 50, and I think it's roughly less than half are above the 200. I think it's like 47%. Yeah, 48% are above the 200. Okay. So guys, you have the market setting up very bearishly. You have your peak here on the money flow up here at this previous, there we go, up here at the previous peak of the channel with the inner channel. This was your peak on your money flow. You have a lower high in the MFI as well. And the market's trying to put on some type of little rally. You look at your volume ratio of buying versus selling, you are still bearish, meaning there's more sellers than buyers. You have the hedge funds shorting again. Not that that's a great indicator. They've been wrong many times as well, but be aware of this. Okay. You need to be aware of this. 4,500 key psychological level, which is where you got rejected from, 44.96 as I was making this video. It's a key psychological level. I would expect this to try to come up again still. So I'm still liking that range, but that's my sweetheart range at 43.35 to 45.50. Guys, if you want to trade these markets, definitely check out our sponsors, BingX for all the cryptos, SimpleFX to trade Bitcoin, equities, commodities, Forex with our special bonuses. All those details are in the video description. If you have any any problems and you want to ask any questions, message Lee in the Telegram and the video description. They both will pay for your first month membership to join our Discord. So you can, again, message Lee for any questions about that. You have any issues on Discord as well. They're fantastic exchanges. Whenever you join anywhere, I always recommend, if you are not an experienced trader, education, which you can also get on our Discord, and of course, paper trading until you are confident in your ability to trade and read the market. Just a suggestion. I do not give financial advice. Pivot pattern. We had our pivot. We made our peak a little bit before. This could mean the pivot pattern because we've had precise pivots. We've been over this many times, tops and bottoms, pretty close to the exact top here within $20. But this could mean the pivot pattern's breaking down a little bit. There may be a new rhythm to the market because this clearly was the top, not down here. But, this is still an area that I shorted 45.92 to catch this decline. So I'll check this out, see if I can find a new rhythm for the market. But in general, I stay with patterns until they're broken, right? Patterns repeat until they don't repeat. But again, looking at this, that key level, guys, that pivot's 43.30. And when you look at a struggle, now you do have, the double bottom here. You see this? You do have your W pattern, and that's that ability to bring you back up to that 4,600 level as well. So that's why I want to watch this to see how this plays out. Let me go ahead and get an expansion on this. 4608 would be the 1618. If you do get inflation readings that the market really likes, right? And the salesman on TV get all the money piling in, that would be interesting to see. That will even be a better trade. Looking at the NASDAQ, let's look at this on the weekly. On the weekly, how did you do that projection? Let me show you where I pulled this projection from. So if you go to, on the weekly, your August 15th high here, down to your market low, look where your expansion lands you, the 1618, 15,759. What is the shape, boys and girls? Feel like we're on Sesame Street. What is the shape that we are making? A potential double top. Key resistance here is 15,759. We're going to look at a smaller time frame chart to get some lower down resistances, but that is a key resistance area for the NASDAQ. So watch that as well. Let's go ahead and look at this on the daily. If we pull a fib from the closer input here, watch where look where there's pumped up to as I was making this video, 15,442 at the 618. Okay. So this is, the market wants to be euphoric. And right here, go over this all the time. We have our double top that broke down, as you can see. And what is this? If this does the same thing, get some candles up, candles up, candles up, it could be another double top that breaks down. Or if you get the good inflation, watch for this to come up and you want to flip this. The 1618 will take you right back above that top, 15,931, and then you can have more upside, potentially riding this low inflation wave into the end of the year as the economy slows, as job openings disappear, as the yield curve is at a massive 40-year inversion, as all that happens and eventually will lead to a recession. But this is short term. Be aware of this, okay? Just want you to pay attention. Want you guys to be aware of these key levels. Let's look at the Russell. Russell again, double top, broke down. Russell key resistance remains the same. Your 50. Your 50 is way down here, or way up here, I should say. 1916, okay? The small caps are only up, I think, 5% on the year versus 14, 15% on the S&P versus whatever it was. What was it? 40% on the NASDAQ, 36, 40%, something like that. So these have been underperforming. There's a lot of financials. There's some energy companies in here, small, mid caps. So this is where you're at on the Russell. The 50 is still strong resistance. It previously rejected you. But if the other indices move up with good inflation numbers, meaning low inflation numbers, then you could see this re-challenge the 50 at 1912, 1916. And of course, if the inflation comes in hotter, then you can look for this to give up. And where the Russell's really in trouble is when it breaks below 1813, you're going back. You lost this pivot. You already lost the pivot ceiling. Here's your pivot base. If you lose the pivot down here, you're coming back into this cluster of candles somewhere in the mid 1700s. Okay. Let's go and look at Apple. Biggest stock in the world. You are not going to have, this is why the market's selling off. This is 11% of the NASDAQ, this one stock. This is why the market's selling off, because Apple spiked up and came back down, right? 3 negative quarters for Apple for revenue, something they have not done since the dot-com era. Also, talking about inflation, I mentioned this as a joke a few weeks ago or a couple weeks ago about, if Apple raises their prices, are they going to lower them on future phones when inflation comes down? Well, Apple's raising the price of the iPhone 15 $100. $100. Do you think Apple, who pays people pennies over in China to make their products, literally pennies? You should watch some of those reports. CNBC even had them, what they were paying people to work during the pandemic. Like it was a joke. It was a joke how little Apple pays people, wealthiest company in the world, sitting on a massive stockpile of cash. That's why they make their stuff in China. They don't want to employ Americans and pay you a fair living wage. But 177, largest company in the world, if this comes down and starts taking out these lows, guys, you're coming down to the one. Well, your first stop will be 176, then 169, and then I would have to pull a new fib to give you some of these downside numbers of where this can go. But right now, you're selling off some. Again, Apple will not. They're not going to give you a $100 discount if inflation comes under control. They're raising prices. So watch Apple. It's going to move the markets. Let's look at Adobe. This is one I'm tracking. For whatever reason, this is like the hottest trending stock on SimpleFX. It's like number one on trending. People are trading it. And I think a lot of that is because of where this thing moved from. This thing went on a massive rally as well. There's articles on the news about how they're doing the best job implementing AI into their platform, up 107% from the bottom. So you hit the 1618 at 560. You're making shapes up here. Let me look at your Wyckoff structure that you broke out of here. You see this? If you look at this, you have this Wyckoff structure that formed up here. There's your buying climax. There's your base, and here's your Livermore pivot you're trying to build on the top. Let me zoom in so you guys can see this on your tiny phones. But look at this. So you came up, you have a double top structure. You want to hold at 552. If you don't hold 552 and you start breaking down, Adobe's going to break down. This is actually a stock I'm interested in trading. AI is a big bubble to me. Does it have future use case? Absolutely. Does it justify Adobe trading at a 53 times price to earnings multiple for the market? No, it doesn't, especially with the S&P's at 18, and in a normal recession, the S&P will trade down to 12 to 14 on a PE. Adobe's at 53. Nvidia's at 43 on forward earnings. These companies are going to give up a lot. See that gap? Remember all those traders that love gaps. See that gap down there? Was that 440? Nice drop. Okay, that will be a nice drop to come back down. The AI bubble has just about run its course. You're still getting some peak Ponzi in there, but we'll see how this plays out. But I'm watching this one closely, and I'll definitely be posting a trade on that in the room if I see one to have. Look at that gap that we had on Tesla. Tesla bounced up. It's at 263, almost 264. Watch 268. But of course, the big one you want to watch is if we do want a little bit of run, 299. Key rejection point. But remember, 268, and if the market starts selling off, always look at your larger macro shape completions of what you're doing in the market, because money flows through the market in a particular way over and over again. That's why you get the same shapes over and over again. Okay, so watch that. There's your key resistance levels. Let's just do a couple more in NVIDIA since we're talking about it. Of course, that's selling off -2.44%. Guys, I think this hit peak Ponzi. Okay. You have your big gap. This trend is starting to break down. If Apple starts selling off overall, I know NVIDIA has its fingers in a bunch of different buckets per se with AI, gaming chips, mining chips, all types of things. But overall, you're going to see this start to break down. I have this coming down to 171. At some point, it's going to hit that. When we do actually sell off going into the recession, that's just the 1618. Obviously, you can go a lot lower than that, depending what happens. But I do think, and many of you will disagree, I think that's a very realistic target because, again, you are trading at such a premium multiple to the market, you're going to give it all up. It's just the way these markets work. Let's look at the French 40. French 40 again was rising up. Let's go ahead and get our resistance. A piece de la resistance for our French traders here. Looking at this, a 46.7304 is where you got rejected. I like the French 40 for a short if it comes back up with an up thrust. I really would like to see that closer to 7,400. Higher the better, 7,434. Given the market conditions, I do think it's going to roll over, but I want to see a little bit more momentum. Same on the DAX, guys. We're still out of our channel. Just doing a DAX pull here on the shorter structure that was made here. Hit the 618 at 15,865, selling off some as well. Why? Because all the markets move together. Let me guess, before we click on gold, I'm sure gold was going up this morning, and now maybe it's coming back down. Maybe I'm wrong. Let's take a look. What's gold doing? Yep, it went up and pulled back. So it's at 1925. Today it hit, with the markets going up, it hit 1930. So gold structure is the same for me, right? So we have our channels that we're working off of here, and we need to watch 1932, 1945. If the markets do want to put in a little bit of a rally with a low CPI, look for gold to make a double top structure. Why? Because it does it over and over again, and we trade these double top structures, and you make money, guys. That's the whole point of trading. All right, boys and girls, hope you enjoyed my rambling video. Appreciate it. There will be a Thursday video to go over all the market data. Like and subscribe. Leave me your comments. I will reply as always. Talk to everybody Thursday. Take care.